Hi, and welcome to the Stockscores Market Minutes for June 22nd, 2015. This week I want to talk about market parties. These are the hot sectors of the market, the parties in the market, the place where everyone's having a good time, money is being made. They're the sectors of the market that are doing the best. You know, there's always money out there, and it needs to be placed in some sort of asset. And what differs is only what asset the money flows into. When a sector is in an upward trend, it means that money is flowing into that sector. Sector's in a downward trend means money is leaving the sector. Money flows from one group to another, and money tends to follow money. In other words, the money goes where the action is. It goes to the sectors that are outperforming. And so it's important to watch for major changes in money flows by looking at the charts of the sectors and asset classes. We want to follow the money into those that outperform. So for example, right now, the biotech, healthcare, and financial stocks are doing well. They're breaking to new highs, while the sectors like mining and gold are underperforming and they're stuck in a pattern of a downward trend. So money is flowing into the healthcare, biotech, and financials and out of the gold mining sector. All right, let's get into this week's analysis. Very interesting chart here in the short term because you can see we had this little island up here. This was Thursday's trading. The market gapped up, looked very positive, broke that cycle of downward falling tops, but got stuck at resistance. That's to be expected. And then the next day it fell right back into the pattern. Essentially whatever motivated this, which is really Janet Yellen's comments about the future of interest rates, whatever motivated that was negated the following day. And so we're back into that negative pattern that we've been in for about a month. And you pretty much can ignore what happened there because it happened one day only and it was taken down the next day. Big picture, we still have a bull market in the S&P 500, but certainly the pace of the bull market is shallow. You can see that the line that I've drawn across the tops in red is rising less quickly than the line that you would draw across the bottoms. We still have rising bottoms. That's a positive. We're still in a bull market, but it certainly is one where the enthusiasm isn't as strong. Here's the chart of the Russell 2000, and this is very telling because here you see money flowing into the small caps. The S&P 500 is a good metric for the large cap stocks. The Russell 2000 IWM ETF is a good measure of the small cap stocks. And you can see small caps last week broke to new highs. And I think that will continue to be the flow of capital over the next little while if interest rates are expected to go higher. Investors are going to start to look for some return in the smaller cap stocks and move out of some of those large cap stocks where yield will be less important. Here's a chart of the TSX 60 on a hourly 1 month basis. You can see that we've been in a downward slide in the TSX for some time. Talked about that last week. I actually put a bearish rating on the TSX for the short term last week, and you can see that it's still in that downward trend. So you want to be cautious with the TSX in the short term. You can also see that that upward trend line that had been in place up until the start of June was broken. And so we're back into this sideways trading pattern. Look at how the Stockscores indicators are dropping down below 50. That's a negative for this market. So you want to be cautious with the Canadian market. Surprisingly, the small cap sector, micro cap sector in the Canadian market, TSX Venture here, is actually pretty stable. So while the large cap Canadian stocks have been falling lower, the small caps, they don't look good, but they're stable, and that's a positive. Here's the Treasury market. Classic topping pattern. You see we had a nice linear upward trend. The trend went parabolic. We talk about this all the time. Trends that go parabolic work their way back to the upward trend line. It did that, but actually broke the upward trend line. And that's why I'm bearish on the Treasury bond market, which means I'm bullish on interest rates. I don't know if you can be bullish to say that interest rates are going higher, but they do look to be going higher. Now, right now, a little bit oversold here. You can see that if I draw that line across the tops, this red line, we're quite far below that. And typically markets will move back up to the line before they resume their downward trend. You can see it happened here, moved down, came back up. Now we've fallen down. We should come back up here in the short term, maybe the next few weeks. But longer term, I still think you have to be expecting higher interest rates. Here's the US dollar, fallen back through the month of June. That's been supportive for commodities, although commodities really haven't had a great market in the month of June. They've just been more or less stable. You can see that with gold, kind of, I guess it's up slightly for the month of June. still below that cycle of falling tops, right at that downward trend line right now. I think that it's starting to look better, but still not a great looking market. Oil market also pretty much flat through June. If it can break out through that green line, that will be a bullish sign that oil prices are moving up. Probably next stop on this ETF would be around the $17, $18 mark. But for now, I think you still have to be more or less neutral to slightly negative on oil. Fear, not a factor. You can see that the VIX is moving to new lows, and this will be a good trading vehicle if the market starts to really sell off sharply, but we've been in that boring sideways range for some time. So US stocks, I'm neutral long and short term. I don't like how the pace of the rising tops is flatter than the rising bottoms on the long term for the US market index. Neutral short term as well. Canadian stocks neutral long term, bearish short term. We've got some selling pressure underway right now. Bearish in both time frames for gold, although it's starting to look better. We could see that flip to neutral. Oil bearish long term, neutral short term. Money is flowing out of large caps and into small caps, and I think that's the most noteworthy money flow trend that's underway right now, as investors are anticipating higher interest rates. Biotech, healthcare, and financials are leading in the US. Canadian markets are suffering. I think you have to be very stock specific in Canada. Oil is stable and looking for a catalyst to move higher. Gold spikes tend to be brief, and so you got to be cautious with those gold spikes until we break a downward trend line. Don't get too optimistic about gold. And as I've said many times in the past, fear is not a factor in this market. Well, that has been the Stockscores Market Minutes for June 22nd, 2015. Have a great week in the market and trade well.